Let's talk about Pi Coin, a name that's been whispered in crypto circles, hyped in online forums, and tapped on millions of phone screens around the world. This is the coin you might be mining on your phone right now, hoping you're part of the next big digital gold rush, watching your balance tick up with every tap and swipe. For years, millions of people have watched those numbers grow, dreaming that one day their patience and persistence would pay off with real, life-changing money. But today, April 14, 2026, the reality is hard to ignore. Pi Coin is trading at just 16 cents. That's right, 16 cents for all those hours, all that hope. To put it in perspective, that's less than the price of a single banana at your local grocery store. And at least with a banana, you get a snack. Pi Coin just leaves you hungry for answers. Over the last month alone, Pi has lost a staggering 30% of its value, sending shockwaves through its once hopeful community. And if you zoom out, the picture gets even bleaker. Pi is down a jaw-dropping 94% from its all-time high, leaving many early adopters questioning what went wrong. Meanwhile, Bitcoin, the original cryptocurrency, continues to soar, smashing through the $72,000 mark and making headlines for all the right reasons. The dream of a high-value, community-driven currency is colliding head-on with the harsh reality of the open market, where hype can only carry you so far. So, what happened? How did Pi go from being the next big thing, a ticket to future riches, to ending up in the digital bargain bin? In the next sections, we'll break down the so-called global consensus value myth that fueled so much speculation and hope, the relentless flood of new tokens hitting the market every day, diluting value and overwhelming demand, and what the trading data is really telling us about Pi's prospects, beyond the hype and headlines. If you're holding Pi, you deserve the truth, why your digital gold has turned to lead, and what comes next for the millions still holding on. To really understand the drama swirling around Pi, you first need to wrap your head around something called the global consensus value, or GCV for short. This is a concept that's become almost legendary in Pi circles, and it's at the heart of the debate about what Pi is actually worth. In Pi communities, GCV is treated almost like gospel. Some enthusiasts boldly claim each Pi coin is worth $314,159, a clever and nerdy reference to the mathematical constant pi. For many, this number isn't just a joke, it's a symbol of hope and belief in the project's future. But here's the reality check. GCV is pure fantasy. It's a number that exists only in the minds of the most optimistic Pi fans, not in the real world of finance or economics. It's a bit like calling your old Honda a Lamborghini just because your friends agree to pretend. No matter how many people play along, it doesn't change what's actually parked in your driveway. The only price that truly matters is the market price, the value set by real buyers and sellers on actual exchanges. Right now, that's about 16 cents per Pi, a far cry from the dream number. Exchanges don't care about dreams or hype, they care about liquidity, trading volume, and what people are actually willing to pay. That's what determines a coin's real-world value. The gap between GCV and reality is massive, almost comical, because GCV ignores one crucial thing: scarcity. Without scarcity, value can't magically appear. Pi's supply is enormous and still growing every day, while real demand from buyers is weak and uncertain. There are simply too many coins chasing too few buyers. The market price reflects this imbalance. Too many coins, not enough people willing to buy them at high prices. That's why the price stays low, no matter what the community wishes. You can't will value into existence just by believing hard enough. Economics always wins in the end. The laws of supply and demand are stubborn and unbreakable. No matter how strong the belief or how passionate the community, supply and demand have the final say. In the world of money, reality always catches up. Why is Pi's price being crushed? The answer isn't just about market sentiment or hype cycles. There's a much bigger force at play, one that's almost impossible to ignore. It's all about supply, specifically the relentless flood of new tokens entering the market every single day, like a river that just keeps rising with no end in sight. Every day, 8 million new PI tokens are unlocked and dumped onto the market. That's not a trickle. It's a torrent, and it's happening on a scale that's hard to comprehend for most investors. In the next month alone, over 230 million tokens will be released. Imagine the impact of that much new supply hitting the market in such a short time. It's like trying to sell a mountain of gold in a tiny village. This isn't theoretical. It's planned dilution, written right into the project's roadmap. The team knew this wave was coming, and now it's here. As early adopters complete verification, their coins become liquid and sellable, adding to the avalanche. Each new KYC check means more tokens ready to hit the open market, and more pressure on the price. On-chain data shows massive transfers. 30 million PI moved to wallets in a single day. These aren't just numbers on a screen. They represent real people eager to cash out. Each unlock is a new wave of sellers, all racing to cash out before the price drops further. It's a stampede, and nobody wants to be left holding the bag. The pace is accelerating, not slowing. With every passing day, more tokens are unlocked, and the selling pressure only intensifies. This constant supply surge creates relentless downward pressure. Buyers simply can't keep up with the flood of new tokens, no matter how optimistic they are. The cycle is self-perpetuating. More unlocks, more selling, lower prices. It's a feedback loop that's tough to break. The market simply can't absorb this flood. There just aren't enough buyers to soak up all the new supply, no matter how strong the community is. It's a textbook case of supply overwhelming demand, a perfect storm that's driving Pi's price lower and lower with no clear end in sight. Remember high school economics? When supply goes up and demand stays flat, price goes down. P-Coin is living proof. The supply curve is skyrocketing, while demand barely moves. Every token unlocked creates more sellers, mostly regular people hoping for a payday. When they see the price falling, they rush to sell, creating massive sell pressure. Buy pressure is weak. Trading volume is just $12 million a day, tiny compared to the flood of new coins. It's like trying to soak up a swimming pool with a paper towel. There aren't enough buyers to absorb the supply. The result? A price collapse driven by pure market mechanics. More coins, same demand, lower price, always. The charts for Pi-Coin are screaming one thing: get out. The Relative Strength Index, RSI, is at 43, bearish territory. The MACD shows a bearish crossover, signaling more downside ahead. Support sits at 16 cents. If it breaks, the next stop is 15 cents or lower. Resistance at 17 and 20 cents looks unreachable. Trading volume is weak, showing apathy, not excitement. Sellers overwhelm buyers, and the price grinds lower. Bearish indicators, broken support, and low volume all point to further decline. The charts aren't just reflecting bad news, they're amplifying it. 16 cents isn't a sudden crash, it's the latest step in a year-long decline. Last summer, Pi traded above 45 cents, peaking at 52. Since then, it's been a steady slide as token unlocks ramped up and sell pressure mounted. By New Year's, Pi was just over 20 cents, and optimism faded. Early 2026 brought a brief pause, but it was just a ledge before another drop. The underlying problems, massive supply, weak demand, never went away. Now, in April, 16 cents is just the logical next step. The long-term chart shows lower highs, lower lows, and moving averages pointing down. The trend has been negative for months. The current price is simply reality catching up. Amid the gloom, some hope Protocol V23, a major update set for May, could spark a rally. Crypto upgrades sometimes boost prices by signaling progress or adding features. Optimists think Pi could bounce to 22 cents if the update lands well. But a software update alone won't fix the core problem: relentless supply and weak demand. Unless V23 creates real utility and new reasons to buy and hold Pi, any price bump will be short-lived. Without genuine demand, updates are just window dressing. Hope isn't a strategy, and software isn't a magic wand. Real change needs real utility. Trading Pi-Coin now is high risk. This isn't a stable asset, it's a collapsing one. The temptation to buy the dip is strong, but you're not catching a falling knife. You're catching a falling piano. The main risk is supply dilution. Millions of new coins flood the market, and most sellers got them for free. Retail investors are at a huge disadvantage, often funding the exit of early adopters. Over 80% of retail traders lose money in normal markets. With Pi, the odds are worse. The friendly mining app hides the brutal reality of the open market. Unless tokenomics change radically, the path is down. Don't let hope blind you to the numbers. Where do we stand? 16 cents. A dream colliding with reality. Community belief can't create value. Only supply and demand set the price. The GCV is a fantasy. The market price is what matters, and supply is crushing demand. 8 million coins unlocked daily, over 230 million monthly. Sell pressure is relentless. Until this imbalance is fixed, recovery is a fantasy. Technicals are bearish, support is breaking, and volume is weak. Protocol V23 might offer a brief bounce, but without real utility, it's just noise. Pi is a high-risk asset. New investors are funding early exits. The dream was noble, but execution failed to create demand. For Pi to survive, it needs a real reason for people to buy and hold. Until then, 16 cents is the price of reality.